Good evening, everyone. Welcome to the channel. Today I am going to talk about Shenzhen Int'L interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Shenzhen International Holdings Limited offers a diverse range of businesses and services across various sectors. These include logistics infrastructure facilities, toll highways development, operation, and management, wind turbine equipment sales, kitchen waste disposal, projects construction and operation, wind power stations operation and sale, logistics centers, and integrated logistics hubs construction, operation, and management, third-party logistics services, logistics information services, financial services, port and related services, logistics park transformation and upgrading services, general bulk cargo terminal operations, electronic information exchange, transmission and value-added services, supply chain management services, project investment and enterprise management consulting services, real estate development and investment management services, expressway construction, operation and management, logistics and transportation ancillary services, cargo transportation and warehousing services, wind power generation systems, research, production and sales, wind farm investments and operations. The Shenzhen International Holdings Limited, 152 HK, stock price has shown a notable increase in the past year, with a maximum percentage growth of approximately 47.86% from its 52-week low to high. However, this growth falls short of the specified threshold of over 48.78%. As a result, there are no identifiable news events that can be attributed to causing such a significant rise in stock price. The primary drivers of revenue growth for the company are primarily driven by its construction service revenue, which saw a significant increase of plus 59.3%. Additionally, the logistics park transformation and upgrading business also contributed to revenue growth with an increase of plus 9.5%. The toll road business and general environmental protection business also experienced a 4% overall revenue increase. On the other hand, the primary drivers of revenue decline are mainly attributed to the port and related services business, which saw a minus 13% decline in revenue due to decreased demand from declining coal prices and market slowdown. The logistics business also experienced a minus 4.5% revenue growth, contributing to the overall decline in revenue. The company's toll roads segment saw an increase of plus 21.3%, while its logistics business segment saw an increase of plus 44.8%. However, these gains were offset by declines in other segments, resulting in a total revenue decrease of 13% compared to the same period last year. Net income and profit margins. A tale of decline. The financial performance of a company has taken a significant hit over the past year. Net income plummeted by 98% from HK $527.4 million to HK $7.93 million, while profit margins also declined in various business segments. The toll road business and general environmental protection business saw an increase of plus 21%, but this was not enough to offset the significant declines in other areas. The logistics parks in Guangdong province decreased by minus 31% in 2025. A slight improvement from the previous year's minus 90.8%. However, the logistics services business took a hit, decreasing by minus 36% in 2025 compared to last year's minus 25.3%. Several factors contributed to this decline. The absence of HK $587 million profit from the transfer of logistics hub projects to China AMC Shenzhen International REIT was a major factor. Additionally, several logistics hub projects in Guangdong province are still in their incubation phase, which has affected profitability. Rising operating costs and intensified competition in the domestic port sector have also taken their toll on the company's financial performance. Overall, the company faces significant challenges in its pursuit of growth and profitability. Addressing these issues will be crucial to reversing the decline in net income and profit margins. The company's financial performance indicates a consistent generation of positive operating cash flow. The data shows that in both years, the net cash generated from operating activities is significant, with HK $1,431 million and HKD $1,431,175 respectively. This suggests that the company has sufficient liquidity to meet its operational needs, indicating a healthy financial position. The company's debt level and interest expenses have undergone significant changes. the total liabilities increased by 4%, with a rise in total borrowings in currency from HK $33,278 to HK $35,981. However, the total debt level also saw an increase from HKD $60,448,886 to HKD $65,413,282. On the other hand, interest expenses have decreased substantially. The company's interest expenses dropped by HKD 103,364 from HKD 810,222 in 2024 to HKD 706,858 in 2025, representing a 22% decrease in total finance costs from H $949,697 to HK $740,617. Management's outlook on company strategy. The company is committed to advancing its strategic plan, focusing on several key areas. Firstly, it aims to strengthen its position in the cold chain storage and intelligent logistics sectors through ongoing projects. Additionally, the group plans to expand its cold storage and intelligent warehouse business, while pursuing external investment opportunities to drive growth. To achieve this, the company will develop a logistics real estate fund system, including public REITs, private funds, and quasi-REITs products. Furthermore, it is establishing a logistics warehousing pre-REITs private fund to nurture premium logistics hub projects for potential portfolio expansion. Management also emphasizes its commitment to developing high-end logistics value-added services in emerging industries such as information technology, data centers, carbon peaking and neutrality, and new energy. Overall, the company's strategy focuses on expanding its logistics capabilities, investing in growth opportunities, and diversifying its services to drive long-term success. Concerns about inventory buildup or supply chain disruption are evident in the financial summary. Several logistics projects are expected to commence operations in the future, but potential delays in construction or other factors affecting their opening pose a risk. The transformation of SZI South China Logistics Park into a digital economic park has already ceased its operations. Additionally, some projects are still under development, which may lead to inventory buildup and supply chain disruptions. Furthermore, operational challenges at Nanjing Ziba Port due to sluggish demand, intensifying competition, and escalating price wars also raise concerns about the company's logistics business. That concludes the financial summary for Shenzhen Int'L. Feel free to comment below, and I will be happy to answer them when possible.